now hand over the headset to Tom. Tom.
Thank you, Rita. Hi, everybody. Tom Williams here. Lovely to talk to you. I was talking to Rita yesterday. We went out for some lunch, and she suddenly realized that your clocks had gone. Is it back or forward?
I think it's forward, is it?
We're not quite sure. So anyway, we checked up on it and realized we had to start an hour earlier. So that's all right. No problem here. Weather's getting slightly better here. At least it's no snow. It stopped snowing and all that. Anyway, now the chart we've got up. No reason why I've got this one up. Particularly, it's a 30-minute chart of the cash S&P 500. And if we looked at the daily chart, which we'll have a quick look at that later on, it's persistently trying to go up. And the trouble with those charts like that is that you can't help looking at it and thinking, ooh, I think it's going to come off. And you start telling yourself something. Now, we were looking at this last week, the daily chart, and that's the exact opinion that it looked as if we should be saying. But I said, wait, hang on a minute. And we looked at the KG chart. And I said, well, look, that's all very well, but this KG chart is still showing bullish volume. So we don't expect it to dramatically fall when you have bullish volume with the KG chart. We'll have a look at that in a moment. Anyway, this 30-minute chart, look, it looks like they're always doing this ploy. They have what looks like a shakeout. So you've got this rapid down move here, right, and then up. Now that usually gives impotence to the upside because this is a shakeout. And look at that volume here. Down here, look. There was definitely buying there, look. The market plummeted down, right. It's even come up with an automatic signal, look. We'll press F1. What's that say, Reed?
Potential climactic action.
Right, okay. Well, that means that there's been serious support. But it's not climactic action as I would know it, but it's definitely showing some support came in. Support, when it appears, will appear on down bars. If it's a shakeout, then it will appear just like that, look. Next bar is up. And now this is likely to give it impotence to the upside. Sorry. Okay. My gardener's just come to the door. Good. Right. Okay, so a slight pause there because my gardener appeared, but he's gone now. Right, okay. So here we have definitely what looks like stopping volume. There's even an automatic signal there. Right. It may have a test of some sort, but normally these sort of shakeouts in these conditions usually mean it's a ploy trying to get higher prices. So we have to watch that. Now before that, look, we have some automatic signals of weakness at the top.
Supply coming in.
But supply, it's not all that obvious because it's Globex and the volume is difficult to see correctly, but the computer is reading it. as supply, which is true. Probably did hit supply. Off it came, bang, right, shakeout, support definitely came in. And so don't be surprised if this market does now go up higher. Now, is there any questions about that, please? This shakeout.
Well, there's just a question here. What shows the black bar? But maybe they don't realise.
Where's the black bar? There?
That's it.
There?
Yeah. I don't know what it means. What shows the black bar?
Well, all the black bar shows is that it closed level with the previous bar. That's all that shows. Blue bars show it's an up bar. Red bars show it's definitely a down bar. Black bars show it's a level bar.
There is another question. I need the headset though.
Yeah, go on.
Yes, a question on here from Jerry. Does the shakeout bar have to extend south enough below the most recent bullish bar in order to set off the sitting stop orders in order to be a shakeout? Do you want that again, Tom?
Say it again.
Does the shakeout bar have to extend south enough below the most recent bullish bar in order to set off the sitting stop orders in order to be a shakeout?
No, the market does not follow any rules. It follows the general support resistance and supply and demand situation at that moment. Don't start trying to apply formulas or rules. You just look at this, right, and you can see there's a sharp down move, and you can see there's definite stopping volume came in on the bottom there. That's massive volume. Don't forget, volume is activity. There it is, look. Next bar's up. That has got the hallmark of a shakeout. It's not really a test. That is a shakeout. And that's a ploy, especially on the 30 minutes, because it's quite a reasonable time frame. That's a ploy normally to get higher prices.
More questions here, Tom. Very good questions coming up.
Good.
So two people, Edmund and John, have questions on the very same subject. So I'll just read one of the questions out, and it's a good one because it's often one that I have as well. Are you concerned the volume is dwindling as price is coming up from the shakeout? So that's true.
No. The main power there is that shakeout. And the market then is bouncing up on the back of that. But that's certainly not no demand up there. No demand appears when you get a sign of weakness, but a shakeout is a sign of strength. If you had a sign of weakness, like say here, that's a sign of weakness there, look. And say the market then had gone sideways, then gone up on low volume, then you would be concerned about it. Then that would be no demand. But the volume is low, but you've got this shakeout behind you. So you would not consider that. It's definitely not no demand. No demand appears after weakness. Now there's definite weakness there, look. Now if the market had gone up a couple of bars there and the volume had been low, then you've got no demand. Then you'd expect the price to come off. But this has gone up. You will get lower volume because there's so much trading going on. Look at that massive volume down there, or activity. So try to keep your train on the tracks thinking correctly if you can.
Yeah, and that's something that I've often, when I'm sitting on my own looking at the chart, I'm worried. Well, I suppose it's a confidence thing. I start seeing these pink bars as it's going up, but I always remind myself that Tom always says the background is the power to the move, and that's what he always looks at. There is a question from Christos. When do we know that a shakeout is over?
We know it's over when the volume disappears and the market shoots up like it has there. I mean, shakeouts, by their very nature, have to appear on down bars, right? But these up bars are all responding to this shakeout, this down bar here, with this massive volume. So shakeouts don't appear on up bars. They appear on down bars. They appear when the market's falling. And there's a very nice example there. Okay?
Yes, so Edmund says, is this a case of no demand in the wrong place, thus making it not as important? Yes, it is. Isn't it, Tom? Yeah, but it's not called no demand. Yeah, so it's not. To Tom, Tom, you can explain.
Well, you see the move up here, though it's on reduced volume, that's not no demand because you've got this right behind you. There's a shortage probably of stock or whatever because of that massive shakeout and that massive volume there, or massive activity. What was loose lying around had been absorbed. And that's why it's going up, look. Now, there's a possibility that they may test this, I don't know. But the thing is, with your analysis, when it happens, you should recognize what's going on. You don't know if they're going to have a test or even an upthrust or whatever. But because of your training, hopefully, you'll recognize it. Like, you don't have to think twice to recognize this up here as weakness. Computer certainly recognized it. And this plummeted down on this massive volume, look. Next bar, blue bar, widespread up, closed near the top quarter, right? That gives it the hallmark of a shakeout. And that's what this market needs. And they're doing that all the time, these shakeouts. We've seen it in the past weeks and even months, that the market goes up on these shakeouts. Okay?
Carlos is asking, is a no supply bar or a test on the way down to the shakeout a good entry long?
I don't quite see that. Do they have tests and shit? Do they have testing on the way down? Not normally. I think you've got your wires slightly crossed there. What happens is they have a shakeout. They have these rapid down moves on bad news, hopefully, to put the fear of God into as many traders as possible. Right? And you can see that there's been a big response to this shakeout here. We know it's big because of this volume, look. It's massive, isn't it? Market turns around on that. It keeps going up, look. So now you might see a test. You may do, the word may. If we do get one, you recognize it. And it'd be a perfect place to go long. Of course, that's a perfect place to go long when you see these shakeouts like this.
Mark is asking, what are the signals on the 2 yellow boxes immediately prior to the shakeout, and how reliable are those signals generally? Well, I'm just going to try and click. Well, this one actually came up, you know, supply coming in with a red signal. This one probably says something similar. Supply coming in. So it was a kind of a warning sign, wasn't it? Yes, so Tom, how reliable are these signals generally?
Well, within your ability to read these charts, they're very reliable because they can't come up unless the parameters that you know make a market weak or strong appear. The computer doesn't decide what it wants to put up. It puts up what you asked it to, if and when, in your code that you had put in. A code which was based on your expertise on whether the market was strong or weak. That's how they work. And what I usually say is that we can prove that what we've put in is fairly accurate. In other words, what we're telling you is accurate, because the computer doesn't understand anything you haven't told it, any mistakes you've told it, anything wrong with your logic or reasoning. It doesn't want to know. If it's there, it's there. If it isn't, it isn't. If you tell it to do something, it does it. It doesn't know whether the market's, it's all automatic. So if the signals look reasonably accurate, or I usually say uncannily accurate, right, then what we tell you must be right. More right than anybody else will tell you, I tell you. That sounds unright. But it's a fascinating subject. And if you get your head around this, which you will do, given time and concentration, and your expertise will build up and up and up until you can sit back and enjoy yourself, even at their expense.
Jamie says that the signals are very reliable when they are in the right place. That is the key. And yeah, so it's a good point actually, because you need to get the education as well. You can't, it's not a good idea to just completely rely upon the software. You need the education to be able to judge it with your own eyes. So which are these setups that we talk about, you know, high volume, selling on an up bar followed by a no demand, for example, for going short, and your shakeout followed by a test for going long. But personally, you know, it's easy with hindsight. I look at charts and think actually the program was right. But of course, when you're trading with your own money, it's a completely different matter. You have to, depending on your confidence, find your setups to make a safe trade, as safe as you can. There's a question here from Krista. I was listening to Steve Phillips earlier today, and he was looking for a short trade in the regions where we are now. Do you have any comments on that? So was this the daily chart that he was looking at, Krista? No answer. 30-minute, 15. Right, okay. So Steve Phillips was looking for a short trade. What are your comments on that, Tom? But that was earlier today.
Yes, I wasn't looking at it earlier, but I certainly wouldn't want to short it at the moment. No way, not with a shakeout in the background. It's as simple as that. But see, I was saying when I started, we were looking at the daily chart last week, and you have a strong, overwhelming feeling that this chart has been crawling up. I describe it like an old man trying to climb a hill. He's going slower and slower and slower. It's all very well, but you will likely to develop a gut feeling, oh, this has got to be the top, look, without the real evidence. But then I said we looked at the KG chart, and the KG chart was still showing the market was bullish. So that would warn you off, because the KG chart is accurate. It has to be accurate, because that's how bullish or bearish volume behaves. If you look at the KG chart, bullish volume is when every time the market goes up, the volume is greater than the volume on the downsides. That's bullish volume. And that's how it works. That's how the market is. It's revealing itself right there. If it's bearish, the volume will be greater on down bars than going up. And that's why you get no demand in up bars in weak markets. So the wonderful thing with the KG chart is it helps to overcome your easily weakness about a chart, you know, with your gut feeling crawling in. Now I'm looking at this now, and that last bar, admittedly, doesn't look very healthy there, but I certainly wouldn't want to go long or short on that. Not at the moment.
Okay. When would you switch to a smaller time frame to look for a day trade, and how would you go about doing that?
Well, what I always do, I always look at the daily chart first, end of day. I mean, VSA's got a very excellent end of day package here, and check that carefully. Right, that will tell you a story. Just check the KG chart, see whether it's acting bullish or bearish. And then you can start looking at different time frames, and you will develop fairly favorite time frames. Now I've got this 30-minute up, no reason why I've got the 30-minute up. But you know, I could put any time frame up. Put a different time frame up on this. Put a 20-minute up. Now, this is a 20-minute chart. Now, actually,
Got 5 minutes left on this bar that we're on.
Yeah, okay, right. Now, that bar at the moment doesn't look strong at all. However, you've still got this shakeout behind you, and there's still automatic signals there. Matter of fact, there's two, look. What's that say?
Potential climactic action.
Right, and what's that one say?
Shakeout.
Yeah, so there are. So you've got two signals on it, one. And you've still got these signs of weakness up here. So there's shakeout. Now this is, what time frame is this?
20 minutes.
20 minutes, right. And it's gone up, look, steadily on that. Now this, admittedly, this bar here, actually at the moment looks weak. But you don't just jump in and short that, because you've got this shakeout behind you. All right? So you want to let it develop and see what happens. But you could read these charts. I suppose if you were super conservative, if you had gone long, you would close the position out on bars that look like that, because that looks like a weak bar. But just because it's got a weak bar doesn't mean to say it's going to fall dramatically, because they're trying to push this market up. They're trying to get higher prices. for reasons best known to themselves.
Okay, Jamie says, I look for VSA principles at trigger numbers and support and resistant levels. It does me proud time and time again. And yes, I do the same. I look at support and resistance. For anybody, I mean, I actually use this, the pivot points. I put the cursor on the final bar, pivot, and a new pivot point, okay, and up come levels that may be influential. And I mean, obviously other people probably do it manually, but me not being a very mathematical person, I just use this and I find it works. So if you look at that, look, we've got a support level and we've had a shakeout at a level of support. So that's just an added confirmation as you're building up your picture. You're looking at the background, looking at the volume, and support and resistance levels are, they do have an effect. So I'll just get rid of that because Tom, what do I do? That's it, to get rid. Tom doesn't use them, but I do, and as Jamie says, it works for him. Tom, there's a question here. Which time frame is best for spot forex trading?
Well, currencies work exactly the same as any of these other charts, and it's a matter of using them. And you can use the different time frames. You've got plenty of time, right? There's no rush in the market. But you'll see stopping volume, you'll see shakeouts, you'll see all sorts of things like that. But the currencies tend to move faster, and but they have their own character. It's that's why professionals, they usually specialize in one area. Like you wouldn't dream, a professional wouldn't dream of if he was a corn trader, trade live cattle or something. They specialize. And if you're trading spot forex, your expertise will improve, will grow if you follow the principle of supply and demand. And as you get so familiar with the way it behaves, you'll keep up with it, I can assure you. And we have a lot of people making money with currencies.
On that subject, it also is important depending on what kind of trader you are. I mean, if you're you're scalping the market, you're only looking for a few points or pips, then you might not necessarily be looking for a principle in the longer time frames. You might find that a principle in a 5-minute or a 10-minute is enough for you, but it all depends on what you're looking to get out of the market. But always look at the longer time frames first to see the overall picture. If the longer time frames are looking very weak, then they have the most power over the next day's intraday behavior. So that's something that you need to look at if you're thinking about time frames. Depends what you're looking to get out of the market. Hello, Sebastian. Sebastian's here, Tom. Hello, Sebastian. Tom says hello. Oh God, now he's typing lots of things in. And Sebastian says hello. Okay, hang on. Jitender, any difference between e-signal and real data? Well, that's a subject we've had plenty of conversations about. You might see some differences in between all data providers, but as Tom says, it doesn't necessarily affect us because we're actually looking at relative volume. We're not looking at every little detail. We're looking at the relative volume, how one bar relates in volume to another one. Sebastian's saying at 1320 is resistance. Yeah, so Sebastian's saying there's resistance. A good place to short on an upthrust, says Sebastian. Okay, and it should decline. Okay. Okay. Krista asks, is it more reliable to go long on a shakeout in an uptrend than in a downtrend?
I would say yes. If you're in an up move and the market hits some resistance to further prices up, they will often have shakeouts, and they love having shakeouts. Shakes the market out and leaves the field free for higher prices. That's what it's all about. And we've seen it several times. Even on these major daily charts, you see these shakeouts appearing as the market goes up and up and up on the back of these shakeouts. Usually you don't see, in a down move, you don't see what we call a shakeout. It's usually weakness.
Okay, I'm just going to bring up the end of day. We haven't got it set up actually. Well, we did, but you remember we had our problems at the beginning. We had data problems. Come on. We are up to date. I was waiting for this to go away. Right. Okay. Yeah, Sebastian says problems. What's new? Yeah, we've had internet problems. We had for several weeks, I'm sorry about that. Just Tom, this area of Worthing, for some reason, just had perpetual internet problems. Then once we thought we got that sorted out, last week we had the Go-To webinar wasn't working, so they had problems. So it's kind of been conspiring against us. Okay, Carlos is saying a question about the KG chart. You remember you were talking about KG charts. Ken couldn't match the daily KG chart on the new. We had that up on the newsletter, Tom, the KG, didn't we? Ken couldn't match the KG chart that we did with a KG chart on NinjaTrader. How do you set up your daily KG chart so we can make ours look similar? Well, here you are. Hang on.
Well, I'm sorry, I can't answer that one. You have to get
chart style KG chart, but I mean
Well, yeah, they are.
You don't know anything about NinjaTrader.
See, I've never seen or used NinjaTrader. For some reason or other, Gavin keeps it away from me. But this is the KG chart as seen by the S&P 500.
Yeah, that's right.
Daily.
Yeah.
And that's what we looked at last week. And although you could easily get a gut feeling that this market's going to fall, right? All the time that's green. A green bar shows that the underlying volume is bullish. In other words, it's expanding on up bars while decreasing on any down bars. And of course, bearish volume is the opposite. Increasing volume on down bars, decreasing on up bars, and it also turns the bars red. And we've got no red bars. And that's why you've got to be super careful here. That talking about going short and all very well, but these charts are surprisingly accurate because this is how the market works. It works on bullish or bearish volume. And unless that's there, it won't be bearish. I think I commented on Apple. Oh, seems some time ago. And the KG chart was all red. And I warned many people. I said, look, Apple is bearish. Well, according to the KG chart. And it turned out that way. Various reasons. I don't listen to the news too much. But if you know, they use the news to whipsaw the market around, usually at your loss. Certainly not there for your benefit. Now, any questions about this KG chart? As far as we're concerned, we don't have to worry about how it's designed, how it's made, and all the rest of it. All we know is that bullish volume turns the bars green. Bearish volume turns them red. Right now, we don't have any red. Right now, it's green. But it does turn quickly when it does go.
Okay, there's loads of things here. Well, I'll just read this out because it's all new to me. Edmund says, NinjaTrader uses a different data source than TradeGuider, which uses Reuters data. Dennis is suggesting Ken at TradeGuider.com. I think that he'd already gone to Ken. Thomas says, all he needs for your inputs on NinjaTrader are your time frame, which is daily, and your reversal amount. Is it 3 ticks 0.75? If anyone could tell me how to find out all this information, then that would be, I'm very happy to try and find out. But so far, as much as I can do is put it up. So anyway, John says, I have the same question. I have KG charts on eSignal. The default setting is to base it on the closing price with a reversal of 2 points. How are Tom's charts set? Right.
There's only one on that, but...
Oh, reversal here.
Yeah.
Oh, hang on. So... yeah. Yeah. So we'll look into it. But at the moment, probably if Peter was here, he might be able to be a little bit more helpful. But myself and Tom, or Sebastian, let's see. Well, it looks totally different on NinjaTrader. What is the base period value on your daily KG chart? What is the reversal? Okay, we'll just have to find this stuff out because maybe you can ask Peter and put it into the newsletter when we get a chance. Okay. Play around with it, says Seb. Yeah, we'll do that. Okay. Hang on. I'm just keeping hold of these questions. Okay, so can you quickly go through how a KG chart works? No, he says. Do you want to speak?
I'm sorry, I've been relying on... don't forget, I haven't done any of this serious work for 40 years. And I just gave the information to a programmer. And he's, well, I checked it out, of course, at the time. But even that was done some time ago. So I can't give you all the details. I'm sorry about that. I don't hold any secrets back. I don't have secrets. Well, this was the only one I tended to put under wraps for a bit because I was hoping Gavin would get it automatic in all these programs. But, I mean, don't forget, we're not, although I wrote the program, right, Rita, Peter, and I, we don't have any financial interest at all in VSA or these programs or any sales or anything like that. We don't want to know. We trade the market ourselves. We enjoy doing it, and that's why we talk to you like this, because it's enjoyable and we enjoy it. But we don't have any financial interest whatsoever. So some of these bits are a bit lacking in our enthusiasm, and this is probably one, because we can't do it without programmers, and they've got to be skilled programmers. Even to do VSA itself, there's been many people try to copy it, but they all seem to fail. And yet it's all straightforward. We tell everybody what creates a signal, and but there you are. It's surprising.
Question there? Right. Peter, what are you what chart are you on? Are we talking about the daily chart, the KG chart, or so we can answer your question? Thank you, Alan. Alan says, we thank you for your honesty in regards to the explanation of KG charts. Present, oh, what we're on now. Okay.
Daily bar chart.
Do you want me to, oh, it is 20 bar. Okay, Peter asks, can you consider the last up bar as a kind of buying climax?
What, on this chart we've got the screen at the moment?
Yes.
No, it's just going up. It's crawling up. They're determined to take it up somewhat, and it's going up because of the shakeout we saw on that earlier chart. The shakeout only, what, an hour or so ago? Well, 2 hours, or 3. But that's not climactic, definitely not. The end of these markets, right, will normally appear. It'll gap up one day. The news will be fantastic, right? All the news will be good, it'll be great. All the banks have recovered, you name it. Greece is in money, profit, or whatever. And you'll see it gaps up. The spread will be narrow and the volume will be massive. If it's up into fresh high ground, it's definitely the market top. That's what will finish the end of a market. We haven't seen that yet. A buying climax is, yes, it may look something like this bar we've got now, but it'll be a bigger rapid move behind it. Wide spreads up, probably close in the middle. But the whole thing is that when it occurs, you will recognize it and see it. Rita just changed the battery on my mouse.
Because it stopped working.
Is that it?
We changed it the other day.
Yeah.
It's not made a difference.
Press that button on the left-hand side.
That?
Yeah, that something gets it going. I think we've got a bug here. We're cursed. Little things keep going wrong. That's off. Oh. Is it?
Yeah. If I have, we'll have to log out and log back in. I'm going to have to shut everything down to see it test that.
When my computer freezes like this, which apparently has, if we switch it off, then the whole thing's to be resurrected. It seems to work when you put it back on again.
Shall I do that?
Yeah, go on. Lucky I've